All right, guys, I'm going to answer 10 infinite banking questions in less than 10 minutes. The clock starts now. And the first question that is asked is, what is infinite banking? Infinite banking is essentially using an overfunded whole life insurance policy to save money in. Your money will grow the rest of your life. Instead of going to a bank or paying cash for things, you're borrowing against your policy to buy things, hopefully assets and not liabilities, but whatever assets or liabilities, your money will continue to grow in your infinite banking policy, and you'll get other benefits because you have permanent life insurance that has more than just the ability to grow your money. So that's infinite banking. Is infinite banking a scam? No, but it's overhyped. If the policy is not designed properly, it can be a horrible thing. And I would say majority of people that are pitching life insurance, beware. And if anyone's pitching you life insurance as the best thing since sliced bread, or that it's an investment, run, because life insurance will never be outperform good investments, and it's just not how it's intended to be. And so that's what I would say. It's not a scam, but a lot of people sell it in a scammy, salesy way. And if it's not designed properly, it's not going to serve you well. Question number 3, is infinite banking only for the rich people? There's people that disagree with what I'm about to say. I think unless you can put an initial $10,000 into an overfunded life insurance policy or infinite banking, you should not do it. There are people that say, hey, you can put $100 a month and all that stuff. And that it's true. There's certain fixed expenses that are the same for the $100 a month versus the a lot more. And so I've just found in the people that I've interacted with, it's like a lot of times if you don't have an initial 10,000 at least to put in, it just doesn't end up performing the way that, a lot of people have expectations, because they're like, oh, I can use all my own bank and stuff. And it just takes a while. And the best thing that you can do is, instead of focusing on infinite banking, is make more money and get more money that you can save. Once you can save in at least $10,000 initially, preferably ongoing, then infinite banking is a great place to store your capital and use it. It's, again, not an investment, and there's pros and cons to what I just said, but for the vast majority of people that believe that they are their greatest asset, it's an amazing strategy. And so, no, so it's not just for rich people. Some people might say an initial $10,000 means you're rich, and then I guess it means for rich people. But like that would be the cutoff. So 80% or more of people that can't fund this properly, yes, I would not say that infinite banking is for you. I would recommend you buy term insurance and save up money in a savings account. And once that gets saved up into a 6 months of emergency, then we could talk about potentially substituting infinite banking policy instead of your savings. And especially if you have more than that, I think infinite banking should be something that you should look at as a part of your portfolio. Okay, I got 7 minutes left. Question number 4, what type of life insurance do I use for infinite banking? Whole life insurance is what I would 100% recommend. If you're going to use your policy and borrow against it and as a foundational asset, whole life is the way to go. There are people that are saying, IUL, and there's pros and cons to IUL versus whole life. And what I will say is, if you're looking at life insurance as a place, as like a more of an investment, a Roth alternative, IULs have some pros to it, and if designed properly, I think they could potentially outperform whole life. Notice my words, potentially, because I don't know. There's a lot more levers, and the IUL is definitely sold as the more sexy vehicle. But as a result, there's a lot more things that could blow up on it. And in most cases, you have a lot less cash value early on. And so I would prefer to have more cash value, more control, less levers and variables that could go right or go wrong, especially since life insurance is not an investment. So why would I want to, put a lot of things on the table or risk a lot of things for something that's not an investment? That's just my 2 cents. But technically, if we're going to use the words infinite banking, I think majority of people would agree that if you're going to use infinite banking, you should use whole life. There are people that say IUL is better. I think it is a mistake, but I'm not anti-IUL for everything, and we can have another video breaking that down. How many infinite banking policies can I own? I know someone that owns 39 infinite banking policies. I do not own 39. What limits your ability to own policies on yourself is how much death benefit you have. You're worth so much economically, and so the insurance company doesn't want you to have an incentive that makes you worth more dead than alive. But if you keep under your human life value, you can get a ton of small little policies, and it's based off, again, the death benefit is the thing that is really determining how many policies you can have. But you can have other policies that aren't even on your life. And so there are people that own tons of life insurance policies on kids, business partners, and whatnot, and they just control the cash. You just need some type of insurable interest, but no technical rules to how many policies you can earn. That's why when someone says, I have multiple policies, they usually start a policy, reverse engineer it for what they can save today, and then as they're making more, they open up new policies, and as long as they're not worth more dead than alive, they can do that. Number 6, how to take a loan from a life insurance policy. You essentially borrow against the insurance policy, and there's multiple different ways you could call in. There's some companies that are more advanced. You can take a loan online, but essentially is you put money into a policy, you have the cash surrender value, and you can borrow up to the cash surrender value. And so in the first couple of years, it's less than what you've put in, and then there's break even, and then you can borrow against more than what you've put in. And you're not borrowing from, you're borrowing against. And I wonder if someone's going to ask me about rates. So I'll wait to answer that question. Number 7, I use a policy to pay off my mortgage. The answer is yes, you can use policy for whatever you want. I would highly discourage that, and I don't think that would be a good use of your money. Even if you could get a cheaper rate, I would not want to give up control and liquidity of my money to put it into something where I could get a mortgage for 3, 4, 5, 6% loan. I am not a huge proponent of using a life insurance policy or infinite banking to pay off your mortgage. When I have more time, I can break down why that is. Number 8, do I have to pay taxes when I borrow against my life insurance? The answer is no. You don't have to pay tax or income tax on what's considered a loan. That's one of the powerful things is when you take a loan, it's a loan. It's exempt from income tax, and so that's why you can have your cake and eat it too, in a sense, is your money is in the policy giving you benefits. You also have access to it, and you don't have to pay taxes. Number 9, what are the interest rates? The interest rates that you're earning in the policy are anywhere from 2.5%, 3% upwards to, we have policies that earn 5% from a standpoint of internal rate of return. And so that's what you can earn. And then when it comes to borrowing against, we're looking at, anywhere from, mid 3s to high 5s or 6s and anything in between. I'm a fan of using a third-party lender. So what does that mean is I could usually get a cheaper access to money because I'm using a bank to take a life insurance policy that's pretty much like bulletproof as it relates to collateral. I've got 2 minutes left. Number 10, how do I design this type of policy? What kind of insurance companies offer this? So if you're going to use whole life insurance, which I would recommend for this, you want to work with a mutual dividend-paying life insurance company. There are about 10 out there that you could use. We have access to all 10, but we use about 5. And you got to work with someone that knows how to do that. So obviously I'm biased. You could work with us. There's also many other people out there that can set this up and coach you throughout the way. The most important thing is you want the policy to be set up properly. This is super, super important. And then you want to work with a team that can coach you and make sure that there's ongoing support, because this is kind of an outside the box way of thinking about money. And you might have questions about the following year, I can put this much money into it. Should I? And there's so many nuances of this. And so you want to work with a company that is mutual, that can allow you to set this up. And then the real technical way that you need to design this, because I have a whole minute left to explain this to you, is you want to make the base insurance premium as low as possible, and you want to maximize what's called the paid up additions. And different companies have different wordage for this, but whether you call it PUAs or you just want to maximize the cash through other riders, sometimes you have to add what's called a term rider into this mix to allow you to get as much cash value, but as little base premium as possible. And any type of way of designing that is going to be good, whether it's a really heavy front load, which we're a big fan, like putting a lot of money up front and then maybe tapering that down throughout the years, or just doing consistent cash flow throughout the time. I got 20 seconds left. We think about money differently here at Better Wealth. This is my 10 rapid fire questions as it relates to infinite banking. Would love to hear your thoughts. Love to hear if you think I answered the questions too fast. If you want me to have a follow-up video on any one of these questions, please let me know. And please subscribe and share this content. We appreciate you. Take care.